Welcome to Video 6. Today we cover 3 critical consumer protection laws. HOEPA, the Home Ownership and Equity Protection Act targeting predatory lending. SKRA, the Service Members Civil Relief Act protecting active duty military. And BSA, the Bank Secrecy Act fighting money laundering. 3 laws, 1 video, all heavily tested. HOEPA stands for the Home Ownership and Equity Protection Act. It targets predatory lending on high-cost mortgages. HOEPA has 3 independent tests, any one of which triggers high-cost status. Test 1, the APR test. Test 2, the points and fees test. Fees exceed 5% of the loan amount. Test 3, the prepayment penalty test. Any one of these 3 tests alone triggers HOEPA high-cost status with strict restrictions. Once a loan triggers HOEPA high-cost status, these features are prohibited. Balloon payments in most cases, negative amortization, prepayment penalties, due-on-demand clauses, and single-premium credit insurance. If any of these features appears in a HOEPA-covered loan, the entire loan is illegal. Lenders must either redesign the loan to remove the prohibited features or not make the loan at all. For HOEPA high-cost mortgages, 2 additional requirements apply. First, borrowers must receive HUD-approved counseling before closing. Second, the HOEPA disclosure must be provided at least 3 business days before closing. This 3-business-day HOEPA pre-closing disclosure is separate from and in addition to the standard tri-DCD waiting period. Both must be satisfied independently. HOEPA applies to refinances on the primary dwelling only, not purchases, not investment properties. The Service Members Civil Relief Act, SKRA, protects active duty military service members from financial exploitation during their service. SKRA covers all pre-service debts, mortgages, car loans, credit cards. 2 major protections: interest rate cap at 6% during active duty and prohibition of non-judicial foreclosure during service and for 1 year after. The SKRA caps interest on all pre-service debts at 6% during active duty. This is the most tested SKRA fact, and here is the critical detail. The excess interest above 6% is permanently forgiven, not deferred, not accumulated, forgiven. The service member will never owe the interest above 6%. The lender absorbs the difference. The protection is retroactive to the date of the military orders, not the date the service member notifies the lender. SKRA Section 533 broadly prohibits non-judicial foreclosure during active duty and for 1 year after, regardless of whether the borrower was in default before or after deployment. In a non-judicial foreclosure state like Texas, the lender must obtain a court order to foreclose on a service member's property. SCRA overrides state foreclosure procedures. Courts can grant stays to allow the service member to address the default after returning from service. The Bank Secrecy Act, BSA, is the federal law requiring financial institutions to assist government agencies in detecting and preventing money laundering. BSA requires 4 anti-money laundering program pillars: written policies and procedures, a designated compliance officer, an employee training program, and independent testing and audit. All 4 pillars must be present for a compliant AML program. BSA requires a currency transaction report, CTR, for cash transactions exceeding $10,000 in a single business day. The CTR must be filed within 15 days. CTR is for cash transactions only, not wire transfers, not checks. The threshold is exactly $10,000. Transactions of $10,001 require a CTR. Transactions of $10,000 or less do not. Structuring: deliberately breaking cash transactions into amounts below $10,000 to avoid CTR filing, is a separate federal crime, even if the underlying funds are completely legitimate. BSA requires a Suspicious Activity Report, SAR, within 30 days of detecting suspicious activity. This deadline can be extended to 60 days when additional time is needed to identify a suspect. After filing a SAR, the institution cannot disclose to the subject that a SAR was filed. Tipping off the subject is a federal crime. SARs are separate from CTRs. SARs cover suspicious activity of any amount, while CTRs cover cash transactions over $10,000. The Gramm-Leach-Bliley Act, GLBA, requires financial institutions to protect customer non-public personal information. GLBA requires annual privacy notices and opt-out rights for sharing NPI with non-affiliated third parties. Sharing with affiliated companies generally does not require opt-out. Exceptions include sharing for loan processing, legal compliance, and fraud prevention. These permitted exceptions apply regardless of opt-out status. Exam traps for HOEPA, SCRA, and BSA. Trap 1. SCRA excess interest is forgiven, not deferred. The service member never owes it. Trap 2. HOEPA applies to refinances on primary dwelling only, not purchases. Trap 3. Structuring is illegal even when funds are completely legitimate. Intent to evade is the crime. Trap 4. SR. Tipping off the subject is itself a separate federal crime. Trap 5. HOEPA counseling and the 3-business-day disclosure are both required independently. Key numbers for HOEPA, SCRA, and BSA. HOEPA points and fees threshold, 5% of loan amount. HOEPA pre-closing disclosure, 3 business days before closing. SCRA interest cap, 6%, excess forgiven. SCRA foreclosure protection during active duty and 1 year after. CTR threshold, cash over $10,000 filed within 15 days. SAR deadline, 30 days from detecting suspicious activity extendable to 60 days. 4 BSA AML pillars, policies, compliance officer training, independent testing. Quick recap. HOEPA targets predatory lending. 3 independent tests. Any one triggers high-cost status. Prohibited features include balloon payments, negative amortization, and prepayment penalties. SCRA caps pre-service interest at 6%, excess permanently forgiven, and prohibits non-judicial foreclosure. BSA requires CTR for cash over $10,000 and SAR within 30 days of suspicious activity. Structuring is illegal regardless of fund legitimacy. Tipping off a SAR subject is a federal crime. That is Video 6. In Video 7, we cover conforming loans, Fannie Mae, Freddie Mac, PMI rules, loan limits, and the secondary market. The general mortgage knowledge section of the exam relies heavily on this content. See you in Video 7.